And to have a deeper view and further discussion about 2014 global market outlook and opportunities, we have Mr. Vicky Amarnani, market strategist from Monex Investindo Futures. Pak Vicky, thank you so much for your time. Happy New Year to you. A lot of things waiting ahead.
A lot of action, yes.
Yes, I believe so. I believe a lot of optimism also can be shared to our business viewer. But anyway, we should provide also what's been happening, the real situation, so preventive action can be taken to becoming the wiser investor. In this case, of course, we always promote about the capital market, how to build this kind of market confidence in Indonesia especially. Well, start in US, when we talk about US economic issue, what can be shared on US current economic state?
Well, I mean, if you can see in the US, the economy has been recovering well, housing prices have been improving, US consumer confidence is at 5-year highs, jobless claims at 5-year high, unemployment from 10% region in 2010 has dropped down to 6.7%. The PMI, Purchasing Manufacturing Index, is above 50, which is suggesting expansion. So there's several US economic indicators that are suggesting that US is already approaching a gradual recovery, a good recovery, and we can also see that from the FOMC statement in December, where they mentioned that they'll reduce the stimulus now. Previous 2-3 years ago, there was quantitative easing 1, QE2, QE3, but now they're in fact reducing the stimulus because it doesn't need as much support now and it's starting to benefit with the positive economy. So as of January, they're reducing the bond purchasing from $85 billion per month, $85 billion to $75 billion. So that's a start. But what is important, what the Fed or the US economy is saying, that they will slowly reduce the stimulus, but the interest rate of 0 to 0.25% will remain accommodative. And even if they raise rates, it will probably happen as early as only in 2015 or even 2016. So stimulus will reduce, but rates will remain low for quite some time to support the economy, to ensure that it is accommodative and there's not a shock and we enter a crisis again. Basically.
I believe major correction needs to be shared to our business viewer as well, because we use the introductory remark related to the U.S. unemployment rate. A positive improvement has been made from 10% reaching now 6.7% on the unemployment rate. What can be outlooked when we talk about 2014 on this unemployment rate in U.S. given several supportive factor and situation on this case?
Okay, I mean the benchmark for the Fed has basically been 6.5%. They have said that if unemployment reduces below 6.5%, they could progressively see to hiking interest rates. And we are now at 6.7, very close. But there's one point to note: the 6.7% unemployment has dropped. But there's one negative to note as well, is that even the participation rate in the unemployment rate has reduced. So the number of people actually reporting and the sample that they take, I mean, not the sample, the actual target that they take has been reducing the number of people. So from the 300 million of population of America, less people are actually being recorded. So it's not very accurate. In fact, that's why people saw the non-farm payroll, which came on Friday, came out much lower than expected. What is the non-farm payroll? It is the number of jobs added in the U.S. economy.
That's why most of them still conclude or summing up that the unemployment rate in U.S. can still be considered as high, right? We still have the segment to discuss about this topic. Make sure you are still with us on Economic Buzz. We are discussing about 2014 global market outlook and opportunities with Monex Investindo Futures. We would like to greet you business people in Singapore. You're on Economic Buzz, the English talk show program that outlook the economic issue for your business. We are also now airing in MNC International, also in Singapore. We are still talking about 2014 global market outlook and opportunities with Mr. Vicky Amarnani, market strategist from Monex Investindo Futures. Before we back talking about the US economic issue, I would like to ask you, nowadays as we can see and as we can predict, this is automatically happen, the developed nation, the stock market is improving very well then. At the same time, can I use this word, that the developing countries' stock market starts suffering because of the consequences? The major question remains always, have we really lost the chance? Like we didn't have the chance to benefiting the moment back then, what happening with the tapering off earlier?
Okay, I mean, first of all, with U.S. stock markets, for example, they're up 27% last year. The Dow Jones up 26-27%. And if you ask me, are U.S. stocks expensive? I don't think so. We can see of a correction of maybe 3 to 5% maximum. I think 5% extreme. Even a 3% correction on the U.S. stock market is attractive. And I still foresee a 20% gain in U.S. stock markets for this year. So Regarding emerging markets, what you mentioned is correct, that emerging markets are suffering. But it is those countries that have a current account deficit which are suffering. That includes countries such as Indonesia, India, Brazil, Turkey, emerging markets. But countries such as Taiwan, Korea, which have a surplus and are doing well, those stock markets are in fact doing fine. So the differentiation between the emerging markets which are doing well and not well is the deficit. Countries which are running under a deficit are more sensitive and could be more volatile. So that's the issue to keep in mind. But yes, with technical analysis, you can see certain levels, certain areas where it is very attractive. For example, the Indonesian stock market below 4,000 is a definite buy, the Jakarta Composite Index. But at 4.2, 4.3, maybe, you know, I think it'll still be well below the 4.5. It'll be capped at that with the elections coming up. You know.
Starting 2014, back to U.S. economic issue. Do you think the U.S. Congress new budget could somehow effectively remove, we always consider this as the threat of another government shutdown? And by the way, you are the one who disagree with that this kind of government shutdown can be said as costly policy.
No, it's not costly. In fact, I have done an analysis and gone through all the past government shutdowns in the past, and the activity has been very minimal. And in fact, if you compare a few weeks after the government shutdown, all the stock markets have been up. And even if you see this time, the stock market, despite the government shutdown, stock markets have performed well. They closed on a positive note at the end of the year. They are not even minus, they're actually positive from the government shutdown. And if you want to see in terms of impact, the impact of the US government shutdown is only 0.02% to the US GDP.
No direct significant impact, as a matter of fact, when we try to understand this kind of shutdown policy. Then why would the US government back then doing this kind of shutdown policy at the first place when they know that it's not really that impacting, doesn't make any much difference on the US market situation?
Yeah. Well, the more that they know the impact is not so big, they can afford to do it. Sometimes, I mean, I would not like to say, but sometimes it's politics. There was disagreement between the Republicans and the Democrats about Obama's health care. All these issues were there. But now, by bipartisan deal has already been passed by the Senate. They have temporary funding until the 15th of Jan. The government shutdowns until 15th of Feb. After the 15th Jan is over, I'm sure the deal will be passed through, as it's already passed by the Senate. When it's passed by the Senate, it's like as good as a shake hand and you've done the deal. So I do not foresee any issue with the government shutdown.
So from your perspective, this kind of shutdown policy more into the political driven policy?
Well, yes, it can cause some volatility, but I wouldn't panic and, you know, start selling on that.
All right, another segment discuss about this, Mr. Vicky. More on the discussion about 2014 global market outlook and opportunities will be brought to you soon. Stay with us on Economic Buzz. This is MNC Business Channel. Back on Economic Buzz, this program can also be seen through StarHub Asia Channel 121 Singapore, and we are also airing under the label of MNC International. With me, Erwin Suryabrata. We still have Mr. Vicky Amarnani, market strategist from Monex Invest Indo Future. A little about this kind of unemployment rate in US. What will be the decent level of unemployment rate in 2014 can we expect? The safest level of the unemployment rate?
Okay, I mean, well, as we mentioned, that it's not as accurate now because the participant rate has reduced on the unemployment. In fact, the non-farm payroll was very disappointing on Friday. Only 74,000 jobs added compared to 198,000 expected. So now people are expecting the tapering may not be as fast as they earlier expected. They'll do it in a slower process. But the actual benchmark for unemployment rate is 6.5%. So if unemployment goes below 6.5%, that's a comfortable level. But another point to add to that is inflation. Inflation in the US is well below 2%. So the Fed has made an announcement that if inflation remains well below 2%, they're comfortable providing the monetary easing. But if inflation exceeds above 2%, then they have to slowly rise interest rates because if inflation rises. But that's not the issue. So I see 2014 as still a comfortable year where we're still going to see tapering happen, but in a very progressive manner. And I think rates, according to me, will only go up in 2016. Because even the US data, we will see ups and downs. There's never a straight road to recovery. We will see some negative data come out as well, and I think rates will only go up in 2016, and that also maybe 25 basis or 50 basis for another year. So very progressively, not like in 1995 when US interest rates went up like a few percent over a year. That situation would not arise. So we can be assured that rates will remain low. Tapering will be done in a slow process. So people who invest into bonds and are concerned about yields, I would just suggest them that basically take care of your duration. I think the sweet spot of the ratings is into the BB, BBB minus bonds. And as long as you take care of which regions, you diversify your portfolio, not everything into financials, a bit of telecom, a bit of other industries. Try to avoid too much exposure to current account, high deficit countries such as Brazil and Indonesia. You can keep some of it because there's good yield, but keep a balanced portfolio. And in terms, do not exceed more than a 5-year dated bond, because if you exceed if you have a long dated bond and treasury yields move, the damage is worse.
When you use the word in a progressive way, meaning we can expect a steady improvement in U.S. economy for 2014 or the year to come. Then using its steady improvement, Janet Yellen also sees U.S. economy accelerating this year and could at least grow, according to her view, by 3% or even more in 2014. What could support her confidence over this kind of growth in U.S.?
I think one interesting factor is the PMI, the Purchasing Manufacturing Index. The Purchasing Manufacturing has been going on record highs. It's above 50. So what does that suggest? Expansion. And the earnings, the US earnings is always 3 months lagging to the PMI. So if the PMI is doing well, you would see that earnings 3 months later when it's reported would do even better. Better earnings means the economy is doing well, more jobs, everybody's happy, and in that way you can slowly rise rates because people are making more money, they can afford to pay their mortgages. So I think the PMI indicator is a very crucial indicator to watch as well.
This is something we should monitor as well as the U.S. economy improves as projected by the year to come, 2014. The Fed lengthy program, let's say by buying billions of dollars of this kind of security. Trillions, okay, at least to pump more money into the U.S. economy. So they say, will it still be relevant to be used?
I think they've done a good job as of now. I mean, some people think it's just a bubble. I do not think it's a bubble. The economy is improving. We can see all the data basically gradually climbing up. We can see the improvement in payrolls, jobless claims. But to a certain point, they will start having to reduce the stimulus, and then we have to test and see how the market behaves. But the good thing is that the Fed is saying we will do it on a progressive way. If they suddenly see that when they reduce the stimulus, the market's starting to shake, they'll provide the support again and rates will remain low. So I'm very assured that everything will be done in a smooth way.
A lot of positivity is shared to our business viewer about U.S. economic situation. Another segment, let's focus on China's economic issue after this one. Make sure you are still with us on Economic Buzz. We are going to talk more about 2014 global market outlook and opportunities. Stay tuned. This is MNC Business Channel. You are still with us on Economic Buzz. We still bring our discussion about 2014 global market outlook and opportunities. And now we are moving to China's economic issue. But Vicky, across the Pacific, of course, everyone knows about this. China's economy has slowed, unfortunately. And after decades, of course, of this double-digit expansion, what can be noted on this? How crippled are they when it comes about the growth?
Yes, I mean, we've seen several quarters where China's growth has been slowing down. But even now we're at about 7.6% growth of GDP growth, and the forecast for end year is 7%, which a lot of people say, oh my God, it's from 10-11% it's come down to 7%. That's really bad. I personally think 7% is still very good if you compare it to other emerging markets, or even like Singapore, Malaysia, who are just 2 or 3%, or even Indonesia, which is 5.8, 5.7. 7% is very healthy, or even compared to developed nations which are struggling, like Eurozone, just 0.1%, or Europe, US 3%. 7% is magnificent, and what they're focusing on is no hard landing, so no complete panic in the Chinese market. They're focusing basically on sustaining growth. So a 7% growth is actually good as long as they can sustain it, and what they're focusing on is basically market liberalization. There's been a lot of government intervention in the markets, which they're slowly trying to loosen out by creating urbanization, cleaner energy, focusing on more developed market strategies, basically to implement this market liberalization, a free economy rather than being intervened. Like, for example, even China funding, for example, so much dependence is there on state-owned entities. Or if you see the China stock market or the Hang Seng, most of it is state-owned entities. So it's so much dependent on the government policies. This needs to change.
In terms of taking the preventive action, what factors could lead them to come into this kind of hard landing?
Okay. First of all, if there's a complete panic in the market, the worst thing I see in the market is if everything collapses at the same time. If US data starts going bad, or there's a panic in US, Europe is not doing well, the debt problems start again, China has issues again. If at one time all this happens, that's really bad. But at the chance of that happening, I mean, I consider it very slim. In fact, I think this year we'll see a nice, progressive, not too fast, but decent recovery, and nothing to panic too much about. That's my view. But with China, basically, any negative data, commodity related, China is very commodity related as well. The impact of commodity is also big on China. So that's another, I would also follow the commodity market on China. But overall, with China, I would basically buy on good entry points with the Chinese stock markets and all. But there is value. especially 2 to 3 years down the line, China has a lot of value because China's stock market, Hang Seng, hasn't really performed compared to global indices going up 24% last year.
Understanding their economic model, of course, everyone knows that the government always intervene a lot toward
Yes.
this kind of economic situation there in China. You said that it should start focus on the market liberalization.
Yes.
To what extent, actually, they can liberalize their market, but still in a secure or safe way, not putting something at stake when we talk about the market liberalization?
Well, I mean, the middle class economy is growing. That's a positive sign. There's good urbanization. That's why we see in terms of jewelry demand as well. It's been skyrocketing because the middle class and lower class can afford it, and then they're buying the jewelry now. So I think the key is I mean, there's a big population. It's a big market. If we have the middle class growth, that is probably the strongest factor in growing this market and beginning about, if the rich get richer and the poor get poorer, that doesn't work. That's where the government has to come to balance it. But if the urbanization takes place, they focus on on renewable resource, clean energy resources, other substitutes, improve infrastructure further in smaller cities. That is a big positive for the Chinese
we should keep this for another segment, Mr. Vicky. Economic Buzz will be back soon with more view from Mr. Vicky Amarnani, market strategies from Monex Investindo Futures. You're watching Economic Buzz. We still have Mr. Vicky Amarnani, market strategist from Monex Investindo Futures, to share his view over the topic that we bring up in this talk show. We happen to still talk a little about a Chinese economic situation. Well, given several situations you have shared with us earlier, I've been wondering about this. Will China continues to, let's say, exert strong economic influence in the region?
Yes, I mean, definitely. China is the second largest economy. A lot of countries export. Indonesia has a dependence on exports as well to China, though not as much as Singapore and Malaysia. But definitely the China's economy will be watched. But definitely number one is still US. What policy, how does the dollar, because we can see the impact on rupiah is also so huge. Even on Singapore dollar, in fact, there's a big impact on the dollar. But yes, the Chinese economy will have an impact. So that's why nowadays all the G7 countries, they work hand in hand. It's no more just everyone, it's globalization. It's no country on its own. Yeah. But with China, we might see small hiccups, but overall 7% growth for 2014 is healthy. But like you said, it's a challenging environment. So whether you pick stocks, whether you pick the industry, you have to be selective in what you invest.
Using that metaphor, how frequent this kind of small hiccup will be happening or occurring during 2014?
When I say a 3 to 5% correction in the stock market, I think we would see that maybe 2 times this year.
Yeah. I see. Well, it's always interesting when we talk about the economic reform and structural reform there in China. Has the economic and structural reform there in China already able, at least in transforming China into healthier, consumption-driven economy for the year to come, using also the potential from the middle income class there?
Yep. I mean, okay, the bureaucracy has been reducing. That's a good thing. My other concern maybe with China is also maybe sometimes the transparency. Sometimes why people are not so confident is that there's lack of transparency, which is improving, but that's another area where people, when you don't know full information, you don't feel fully comfortable to invest. Yeah, that's another concern. But they're getting there through better economic policies, investing in the right departments such as clean energy, infrastructure, putting market liberalization to place, reducing state-owned entity. They're looking at a lot of reducing state-owned entity stakes as well in certain companies to get the market to work as a free economy. Yeah.
I see. Moving to EU economic issue, straight, short question to you, Mr. Vicky.
Yes.
Are there any increasing signs, at least signaling that the European economy has reached its turning point now?
Okay, to put it in a simple way, basically the European economy, yes, the consumer confidence is improving, the PMI, the Purchasing Manufacturing Index is increasing, but yes, the two big problems are debts are still high, and unemployment level is still at record highs at 12%. So another positive also is the current account deficit. Current account deficit in Spain, Italy, Portugal has been improving. In fact, they're nullifying the deficit. They're slowly turning into surplus. But the issue is the debt is still large, growth is very slow. Eurozone growth is only 0.1%. But yes, I think Europe is maybe in a mild recession, but they can slowly come out progressively. But we could still see hiccups because of the high unemployment and the high debt to GDP ratios. But with the fact that now unemployment rate is high, it is improving their competitiveness in the market because people are willing to get paid less as long as they get a job, and that could improve the GDP over time. But it's not the best market to be in.
All right.
And I would be still cautious, basically.
All right. We should save for the last segment talking about commodity market after this market.
Yes.
Make sure you are still with us. We still have one more segment on eBus talking about 2014 global market outlook and opportunities. We have reached our last segment talking about 2014 global market outlook and opportunities. And we're going to have another view from Mr. Vicky Amarnani, market strategist from Monex Invest in the Futures, to conclude his view toward our topic. This has something to do with your background of expertise as well. When we talk about commodity, I believe what comes into your mind is gold and oil. Well, when we talk about this global economic issue and try to relate it to the commodity market, what is actually nowadays the international impact of the U.S. Central Bank's decision to scale back monetary stimulus? Will commodity-dependent country, let's say like Indonesia, see their revenues fall?
Yes, there is a big impact because everybody follows what the US is doing. I mean, if you see even on the rupiah, besides what happens internally in Indonesia affects externally. Sometimes nothing is wrong with Indonesia, but rupiah is weakening because of strong dollar.
Yeah.
So definitely, and if they reduce the stimulus, dollar will strengthen further, although a lot of it is already priced in. Dollar will strengthen further, and that's going to have a negative impact on rupiah and commodities as well. Yeah.
Indonesia, how do you see the overall performance of the commodity market in 2013 back then, especially on oil and gold commodity?
Okay, well, maybe I'll talk from an international perspective for oil and gold. Oil has been very dependent on, geopolitical issues and reasons that are going on in the market. When there were issues about Iran, about Libya, cutting production, going on war, that escalated the oil price up to $110 a barrel. Now we're down to $91 because of the dollar strength. Libya production is increasing. So with oil, basically in 2014, my view is we're going to be range bound within $85 to $105 for 2014. But at the $100, it's already a level that doesn't make sense. But it's because of the geopolitical turmoil that could arise again in 2014 that could cause it. But if oil drops below $85, also for countries that run oil-rich countries that run their budget on oil, they will just simply reduce the supply to increase oil prices because then they cannot manage their budget. So I think oil is within range bound. When it comes to commodities such as gold, we have seen a drop of 28% in 2013, which has been the worst drop since 1981. Or a 38% drop from the high of 1924. So maybe now the big question comes that after such a big drop, is it attractive to buy gold? Will gold bounce back? In simple, basically, gold can have a small bounce of maybe about 10% to $1,350 to $1,400 per troy ounce. But even in terms of drop, it's now at $1,250. At the most extreme case, if everything goes well for the American economy and the dollar strengthens, I do not foresee the gold dropping below 1,100. So my view for gold is range bound, $1,100 to $1,400, and this is probably the most optimal market to trade the markets. You can actually trade and benefit when the price rises, and in fact, even when the price drops.
Either gold or oil or both in either way, will this or those commodity market outperform other asset class in 2014 on your projection, oil or gold?
Okay, this is an interesting question. In terms of the key pick, gold is not the key pick for 2014. Probably stocks are more the key pick because people are seeing an improving economy and they see stocks can perform more. In fact, US stocks are expected to perform 20% this year. Developed markets are a more favorite pick. But with gold, that's why I say that even though we don't see a big bounce in gold, the big move that it went up is done. Even the move, so it's limited upside, limited downside.
All right.
But with this range that it's there, it's a great market to trade.
Yeah.
And that's where we come in. If you would like to know more about us, you can visit our website.
All right. But Vicky, speaking about knowing your website before we close up our talk show, you happen to be the market strategist from Monex Invest in the Futures. Monex is going to hold an event. Share with us about this.
Okay. I mean, the closest event that we're having coming up is on 15th of January, which is held at Kebun Siri, our Kebun Siri office. And the theme is where are the trading opportunities for 2014. So if you want to know more specifically, you can register for our seminar, which is completely free. You don't have to be a client. You can RSVP Ibu Sally at 021-3270-7611. If you have any further queries about trading, you can also visit our website at www.mifx.com or call our customer service at 0800 116639.
All right, very useful info. Mr. Vicky Amarnani, again, market strategist from Monex Invest in the Futures. Thank you so much for sharing this
my pleasure.
discussion. Best luck for you and the upcoming event of Monex Invest in the Future.
Thank you.
And that's wrap up our talk show for this time. Hope to have you soon in the next Economic Buzz with other issues to bring up in the discussion. I'm Edwin Surya Brata, wishing you best luck in doing your business today. Let's talk about your business in eBuzz only on MNC Business, the first business channel in Indonesia.